Hello, this is Markets Daily, hosted by me, Jen Sanasi. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you're actively trading or simply fascinated by the volatility of the crypto markets, this show is your compass to understanding where we were, where we are, and where we are going. Joining the show today is Chief Investment Officer of Bitwise Asset Management, Matt Hougan. Matt, welcome back.
Thanks for having me, Jen. I'm excited to be here.
Of course. Well, it is a very interesting time, I'd say, in the crypto markets. So I like to start off with a broad question on this show. What are you watching recently?
I may be thinking a little bit about the election. I
Maybe.
think maybe just a smidge. From my perspective, where I sit, I actually think this is one of the best times to buy Bitcoin and crypto that I can remember in recent years. I think a lot of the risk in this market has been de-risked, and the market is just sitting on the sidelines waiting for the election. But my core view is that crypto has already won the election. Regardless of what happens on November 5th, Washington is moving in a more favorable direction for crypto. And I think it's just a matter of times before the market moves to new all-time highs. So I'm sitting here biding my time, but extremely optimistic about where we're going in the next few months.
It's really interesting you bring that up. I think some retail investors who might be watching the price action might be sitting on the sidelines because we are reaching the previous all time high. I think 99.7% of Bitcoin wallets are in the green. So, talk to me a little bit about if you are a first time investor in Bitcoin, why now is the time?
Yeah, here's what I see when I look at the chart since March. Bitcoin has been, say, trading in a range between the all-time high around 73,000 and about $50,000. And it seems to bump its head against that all-time high repeatedly and can't get over it. And that makes some behavioral sense. I think there are a lot of investors out there who are willing to sell at the all-time high. They like the idea of getting out at peak prices. But eventually, we're going to exhaust the demand to sell at that all time high. The Bitcoin ETFs are vacuuming up record assets. We're seeing rising retail demand. And one of the reasons I think it's an interesting time to think about getting off zero is once we exhaust that selling at the all time high, where will Bitcoin stop? In other words, if we get above 73, if we get to 74, 75, who is selling? I think the next major stopping point for Bitcoin is $100,000. I think that's where we'll again bump into people who are willing to sell. But between the all time high of 73 and change and $100,000, I see a little bit of an air gap. I think Bitcoin could rapidly make that space if we do get above these all time highs.
When do we get to $100,000, do you think?
Look, I think we're going to get there by the end of this year. That's obviously conditioned on what happens in the election and the immediate aftermath in the election. That's a prediction and not a promise. But if you step back and you look at this from a 30,000-foot perspective, we have positive direction in Washington. We have institutional investors allocating. We have the ETFs heating up. We have rising concern about debt and deficits. All of that to me spells six-figure Bitcoin. And my guess is we get there by the end of the year. If not, I think certainly in 2025, we have a high probability of seeing a very strong market in Bitcoin and indeed in other crypto assets.
We're talking specifically about Bitcoin, but I want to zoom out a little bit. Recently, we got MicroStrategy, Coinbase earnings. These are crypto adjacent equities. Talk to me about some takeaways from these earnings reports. How are you watching crypto equities as we head to the end of the year?
Yeah, I think crypto equities are in a really exciting space. You have the miners who are benefiting from the sort of dual jetpacks of crypto and AI demand. You have Coinbase, which somehow maintains its near monopoly position in the retail space, an incredible business. You have MicroStrategy doing its thing. Look, there are a lot of investors out there who are still uncomfortable holding Bitcoin and Ethereum directly, and they're looking at these crypto equities as, an alternative way to get in. I think particularly if you look at Coinbase, that company is executing extraordinarily well, not just across its core business, but across what's going on in base and their view for the future. I think it's hard to look at a stock like that and not be excited about where it could go in 2025.
You said MicroStrategy is doing its thing, and I want to dig a little bit deeper into that because Coinbase, when you, I guess, look at its business strategy, a little bit more diversified, although still very focused on crypto. MicroStrategy all in on Bitcoin. We learned, I think, yesterday that they plan to raise $42 billion to buy more Bitcoin over the next 3 years. How are you looking at MicroStrategy as an equity? I mean, just given what you've said, it sounds like maybe Coinbase may be a more diversified bet on the crypto ecosystem, whereas MicroStrategy might just be a bet on Bitcoin.
Look, MicroStrategy is an incredible company. I think Saylor is an incredible leader, and he's executing a financial plan that makes a great deal of sense. I think it's challenging to think about the fair value of MicroStrategy. It's trading at a premium to its Bitcoin holdings. Could that premium expand as it takes on more leverage? Could it fall as people supplement other things? I'm not sure. I am certain of one thing. I wouldn't bet against MicroStrategy. I wouldn't bet against Michael Saylor. And I'm glad that the equity exists in our ecosystem. We own a lot of it in our ETFs, but it does have that volatility and a not one for one relationship with the price of Bitcoin. It may be 1 for 2, or it may be 1 for 0.8. And that's where the risk lies. But for investors looking to get levered exposure to this space, it's been working for a long time, and maybe that will continue to work in the future. So I do love the company. It's just definitely a unique beast.
A unique beast. I feel like maybe our editors are gonna pull that out for the
Oh
headline
man.
of this video. I wanna dive a little bit into your CIO memo. It was picked up by a few different media outlets. I know you tweeted about it, and it's centered around this question that you were asked recently. Someone asked you, "Does the US dollar have to collapse for Bitcoin to get to 200K?" You and I have already spoken about what it would take for Bitcoin to get to 100K. Unpack this a little bit for me for folks who haven't read the memo. Talk to me about how you're thinking about this and where the question comes from.
Yeah, this question was at a dinner with advisors who have a large allocation to Bitcoin, and it really stopped me in my tracks because I think a lot of us, when we talk about Bitcoin, make sort of a lazy argument. We say something like Bitcoin is becoming digital gold and the US is abusing the dollar, so Bitcoin is valuable. And what the CIO memo said is that's actually two arguments in one. So, one bet you're making when you invest in Bitcoin is that Bitcoin will continue to mature and stand shoulder to shoulder with gold. And if it does that, if it matches gold from a size perspective, even at today's prices, you're talking about $900,000 Bitcoin. The other bet you're making is that the US will abuse the dollar. It will pile on debt. That will happen in governments around the world. And the size of the store of value market, the size of the inflation hedging market will grow. The reality as an investor is you only need one of those to be true. The US could not abuse the dollar. Bitcoin could just continue on its journey from sort of idiosyncratic retail asset to mainstream institutional asset. And you could be looking at a 10x in your position. Or the government could abuse the dollar, continue to pile up debt, and the size of the store of value market could grow. And you could see a Bitcoin position double or triple or more. The beauty of it is those two compound. If we see both of those, as I said in my CIO memo, we're talking eventually about 7-figure Bitcoin. And that's my sort of core response. So the answer to the question was no, the US doesn't need to abuse the dollar. The dollar doesn't have to fail for Bitcoin to get to $200,000. All we need is for the trends we've seen over the last 10 years to continue for another year or two. And I have a high degree of confidence that will happen. But if we get both of those events, which honestly, looking at the facts on the ground, seems probable to me, man, it's Katie bar the door. It's sort of the really optimistic scenario that Bitcoin investors have been waiting for. And that's, I think, where we're pointed in 2025, 2026, and beyond. So that's what I tried to convey in that memo, just breaking that one argument into two so people could understand the real drivers of Bitcoin's growth.
I'm so sorry to ask you this. You dropped a little teaser there, and I know people are probably wondering it, if you look at the trends you've seen and you look at some of the predictions you've made, when do we hit 7-figure Bitcoin?
Look, I'll point to Alliance Bernstein, which had a note out of $1.1 million Bitcoin by 2033. For people who don't know, Bernstein is a $1 trillion asset manager that's well known on Wall Street for something having some of the best research in the space. And I raise that because not because I'm aligned with 2033. I think it's possible we get there earlier, but just because that possibility of seven-figure Bitcoin is now openly being discussed in the most august halls of the leading research shops on Wall Street. And if we go back in time when Bitcoin was a few $1,000s, the idea of $10,000 Bitcoin seemed extreme. Right now, I know with Bitcoin trading at 70, the idea of $1 million Bitcoin still seems like a fantasy to many people. But you can do the math and you increasingly see TradFi investors doing that and saying that's a possibility. When will we get there? Will we get there? I don't know. But it's now sort of within the Overton window of what people are considering possible. And I think that says a lot about where this industry has gone and where it's going in the future.
Hey everyone, did you know 52 million Americans own cryptocurrencies? That's not just a number, it's a movement, economic, social, and political. Decentralized finance, blockchain, and digital currencies are more than buzzwords, they are the future. This November, it's on us to show up and step up. We need to protect crypto to ensure it continues to fuel innovation and freedom for our families and businesses. Don't let this opportunity slip by. The future of crypto is on the line. Make your voice heard this November and pledge to vote now at standwithcrypto.org/pledge. All right, let's come back to the election now. We spoke about how the election could impact the price of Bitcoin. You said it probably won't really. If we look at assets outside of Bitcoin, Ether, some of the alts, does your view change there?
Yeah, it really does. I think if you get beyond Bitcoin and Ethereum, which have already made it through the regulatory window, they're already ETFs, they're already being used by mainstream institutions. You start to get into a territory where there is more legitimate regulatory risk from Solana on down. There's less clarity on how they will be regulated, whether they are securities in the view of the SEC or the CFTC, and who wins makes a big difference for that market. In a Trump presidency, we know he's said he'll fire Gary Gensler on day one. We can expect a new SEC regime relatively quickly, which means I think we'll see a strong altcoin rally. In a Harris victory, look, I think we're going to get to this new regulatory regime eventually. Harris had made some very positive comments about crypto. That's the trend where Washington is moving anyway, but it's going to take longer. We won't have that immediate turnover, that immediate flipping the page. There will be more uncertainty, and markets dislike uncertainty. So I think those altcoins could face a short-term struggle in that event. I would say that might be a buying opportunity if your window is a few years out, because I do think Washington has broadly flipped and turned to a neutral or pro-crypto view. But I think the market may interpret a Harris victory as a loss for altcoins. It could give sort of a pullback that, if you have a multi-year horizon, could be an interesting moment for you.
And Matt, just before we wrap up here, looking beyond the election, what's the next catalyst you're watching?
It's really just this tsunami of institutional assets that are coming into this space. And you can see this in the Bitcoin ETFs, which are back to pulling in $500 million in new flows every day. I will say, Bitwise does something like 10,000 meetings with professional investors every year. Over the last few weeks, there's been a sea change, sort of a phase shift in how those meetings are going. In the past, maybe 1 out of 10 of those led to an allocation. I will tell you anecdotally that over the last 2 weeks, as I've been on the road, the number of those meetings that have led directly to people deciding to get off zero has increased significantly.
Wow.
So the big catalyst to me is just this wave of institutional money coming into the market. It's accelerating. You can see that in the data. And I expect that to accelerate even further as we turn into 2025.
In those meetings with professional investors, is there something that investors are fearful of when it comes to the crypto markets? Like, is there a common fear amongst folks who are just starting to dip their toes?
Yeah, absolutely. Look, it's a very volatile asset. It's always scary to add a very volatile asset into their portfolio. It's a new asset with regulatory risk. You don't get to be the best performing asset in the world over the last 1, 3, 5, and 10 years without having significant risk. Even those of us who are extremely pro crypto have to recognize that we don't know what regulation will look like exactly. We don't know what the future will hold. So I think there is still some hesitance, and maybe there's still some sort of vestige of reputational risk for these professional investors. It's not yet mainstream to allocate to Bitcoin. You're sticking your neck out, and that's not what traditional finance does. That's sort of fading over time, but I do think that reputational risk still hangs in the mind of some of these investors. But on the other side, they see these inevitable trends. They see the growth in institutional adoption. They see BlackRock building a big business in it. And you're starting to see that scale shift to where they feel more compelled to allocate and more risk in not allocating than they do from staying on the sidelines.
Matt, as always, it was a pleasure having you on the show today. Thanks so much for joining us.
Thank you for having me.
And thanks to our audience for watching. If you enjoy Markets Daily, subscribe to the CoinDesk Podcast Network. That's available on all podcast platforms. If you like watching, subscribe to our YouTube channel. Give us a thumbs up. Thank you for coming on this journey with me to better understand the crypto markets, and we'll see you next time.